Yeah, so I'm back, and I do mention up here the order placement was cherry picked, and it would be easy to take a loss on. Um, so let's just continue. Two trades can be found in the New York session. Of course, once the main draw is hit, price started slowing down, which did set up for an active afternoon session. You can kind of see the buy side liquidity, how we do get a short setup. It's a little slow, very, very slow. And I mean, this, no matter how I want to look at it, I would have taken a loss trying to trade short after the initial run higher. But 930 does open up, makes a move down into an hourly low, so it does an hourly sweep, also the hourly order block. You can see that by looking at the hourly chart here. This is a very, very nice trade. Um, if I went back to my mechanical model that I created at the beginning of the year, this would be this would be the model right here. And I wasn't, unfortunately, I was at work, and I couldn't take this, but it was beautiful. I didn't even see this happen live, but this was beautiful. This would also have been my new model, so you have your fair value gap, inverse fair value gap, change in state of delivery, and then I don't know if I would have targeted the buy side liquidity. I would have went for a minimum 2 RR, but that could have, I mean, could have held it all the way to the buy side liquidity at the high of the day. At most, once buy side was mitigated, price took its time before eventually giving up the ghost on a 15-minute sweep to drive to a discount pricing. So it took out buy side liquidity, and then once it doesn't really do it in the right time. It does take it out towards. You can see after the short loses. Technically, a short, the stop should be on this high, and it wouldn't have lost. It would have worked. It would have taken all day, but I mean, it would have still worked. I just know I wouldn't have put my stop that high. I would have had a tighter stop. Just by knowing how I trade, I would have definitely tried to have a tighter stop. And back to where I was in the afternoon, we did have a sweep here, a 15-minute sweep. So if I were to come back in the afternoon and then start looking for my trade, if I wait for a 5-minute, 3-minute sweep, or a 15-minute sweep, another point of interest, you get this one there, and then I did take this trade. So you have your fair value gap, inverse fair value gap, change in the state of delivery. That's the run that did the sweep, and then you go short. I targeted sell side liquidity. I could, and then the end of this sell side liquidity, which is the end of the market maker buy model. Or sorry, market maker sell model. So you see, I take partial here, partial there, and I completely close the position. So that was the paper. That was a paper trade. I just wasn't planning on trading. I had just gone off work. No, I don't know where I was, but I hadn't really planned on trading, and I just happened to have some downtime, and it was one of those where I hopped on the charts and just saw a trade. I thought of taking it with live funds, but I just, I just didn't really. I said it's more responsible for me to take it with paper. It wasn't like I had decided I would trade. I was just looking at the charts because I was bored. But anyways, Tuesday the daily chart is still consistently pressing higher, showing no want to seek lower. However, we did take out previous day high, and it's CPI tomorrow, so volatility can always change something. So you see how now, after the slow Monday, which is expected, it's a Monday and there's no news today or Tuesday, or Monday or Tuesday, and then we do have a new high of the week, a new weekly high, with Tuesday making a big run higher. So let's look at that run. 4-hour point of interest is that rejection block. You enter the rejection block and you start going higher from there. There's also the previous week high that I'm going to pay attention to. So Asia, once again, very active, makes very insane runs higher and then lower, which kind of leaves you in a weird spot for the London session. There is still trades though in the London session because Asia didn't really trend. There was volatility and movement. There was a large range, but it wasn't really a trend. And I tend to notice that price is often going to consolidate after a trend to create new market structure so you can use it to house more liquidity. But whenever you have up and down price action, even if it's a large range and you had these huge moves, like monster moves, I find that price will still often tend to want to move in a direction, directionally, instead of sideways and not really go anywhere, because it does have market structure to move to. So if that makes any sense, it might just do it a little bit more slowly compared to what the day has done, like it has here, but it's still pretty directional. You don't really go back and forth after the volatility like 9:30 and 3 a.m. After, in the odd times you do like 7, 8, 9, but as soon as the sweeps come out, like, you do move pretty quickly in one direction. Midnight's open all the way up here. We have 8:30 open there, so I use them interchangeably. In the morning, going into London at 3 a.m., I was only looking for longs because we're way beneath midnight open. We've taken out a new low of the day for some of the previous day lows, and then hourly 4-hour rejection block, 15-minute sweep. Those are all different point of interest that I could use to get into a trade. And then I was actually with my roommate looking at all of this live. He wanted to learn how to trade, and he has insomnia, so I'm not too sure actually. He has trouble sleeping, and he was up at that time, and we just happened. I invited him, and it is what it is. But inverse fair value gap, change in state delivery. Once again, all three things are there. I didn't get the initial entry. I had placed my limit order, but it never came back down. So it did come back down here though, and I apologize for the noise right now. And then I get in right up here, right as it comes back down, change in state of delivery to my limit order, sell it at the buy side liquidity. He was there, and he left around 4 a.m. when I kind of told him, like, all right, it might never come back to my entry, so you might as well just leave. And then I started just doing my own thing while I waited for it, but it still did work, and it barely did any drawdown, which is really nice. So that was a really good start of the week. This was the first live trade of the week. I keep my trades here, so this is the paper trade I took. This was the live trade, the first one of the week, and I took some more the next day, and then nothing Thursday. But I'll go through those. I think this is all for the London session. There wasn't really anything else to look at. In the morning session, though, you have a lot of weird, this is really, really odd price action. We do have the 8:30 opening here, so once we get above the 8:30 opening, you can look for shorts if you have higher time frame PD arrays. You've got an inverse hourly fair value gap, so that's this one here. There isn't any other fair value gaps outside of this inverse fair value. It's the highest one, really. So price does get up into here, and then if I were to try and look for anything else in 15-minute, you see it's just another big fair value gap, so there's nothing I can really refine it to, unfortunately. Maybe on like the 5-minute, but I'm not going to go that far back. Still, what do I say, by the way, here? From looking at further possible points of interest, this model would have had many possible areas to give a trade today. So honestly, anywhere where there's a drawing, I really like the 15-minute sweep, except this is outside the time I trade. The order block up here on a 15-minute chart. You have the hourly inverse fair value gap. All the times it comes in hits this. You have this sweep here, which definitely takes out some lows, and then you have the hourly fair value gap, which resists price, supports price in the afternoon. And this would have been a good afternoon session to trade, because if you ignore the price action from the afternoon, and, after 12, if you pretend like it's not there, what do you see? You see kind of like a cup that hasn't been fully filled yet. So that cup, oftentimes is going to want to get filled. It's called a market maker buy model. So from where we make the low here and we start to trend higher, all we really do is just very quickly go back down. Honestly, don't even think this should have happened. To go this far down, maybe to this low, would have been what I would have wanted to see, to disappoint the kind of trend. But we didn't really need to go that far down. So a lot of this wick, I just see that as volatility and overshooting a little bit. But mainly, you just kind of want to look at the trend, how it goes directionally lower, and then once it gets to a discount to a certain area where there's liquidity, it'll go directionally higher back to where the liquidity used to be at the high. And because this range is so quickly going lower, we don't really have much back and forth. It's kind of very, very directional, which is really nice. But in the PM session, you kind of want to focus on completing this market maker buy model, getting back above the midnight open and up above a new high of the day. So you can very well still look for high probability trades in the afternoon, and there is some. But before I get to that, I'm gonna ignore the 7 o'clock hour because I don't really trade that. This long at 9:30, which draws to the hourly bullish fair value gap, is acting as my point of interest, but is cherry picked and would have probably ended up losing if taken real time. The entry and stop placement is cherry picked, and if I would enter closer to the change of state of delivery, this wouldn't have worked. So yeah, right here where we change the state of delivery, I definitely wouldn't have been able to make profit if I would have went long on the close where we changed state of delivery. So I mean, I wouldn't have. I would have waited for it to retrace. Would I have gone in at the change of state of delivery though? Probably, and then my stop would have been underneath. Would have had to be underneath this candle at least. So I wouldn't have gone stop, but I don't know if my profit would have been here. I don't think my profit would have been here, and I would have probably gone. I don't know if I would have gone stopped out. It looks like I would have. Yeah, definitely would have. Because I would have gotten stopped out. It would have taken a very long time, and I wouldn't have had to spend much time in drawdown. But still, I just know I wouldn't have gotten stopped out. And yeah, I mean, it is what it is. So far, there's only like 2 losses, really, that we've seen this weekend. I mean, with the RR, more than enough profit. Then we get 3 areas I want to look at: the 5-minute sweeps. All of these smaller point of interest happen as we trade into a bigger point of interest, being the hourly bearish fair value gap and pink lines. I already talked about that, and also keeping in mind where the 8:30 open is, allowing me to short, even when we're beneath the midnight open. So all these point of interest, shorting opportunity, shorting opportunity, shorting opportunity. You have the support of the higher time frame fair value gap. But let's take a closer look at each one of these on the 1-minute chart. So not a single one of these, except for not even the last one, has my trade, my entry model. So there's no bearish fair value gap with a SIBI or BISI. There's no inverse fair value gap with either a BISI or SIBI, and a change in the state of delivery. So we need 3 things: SIBI or BISI, an inverse fair value gap, and a change in the state of delivery. And not a single one of these sweeps are followed by all 3 of these things at once. So there's no trade. So I mean, I don't see a way I could have captured on this move lower here, unless somehow I would have went short up here, which even then I think, yeah, no, there would have been no change in the state of delivery. Yeah, nothing would have closed underneath this candle. So yeah, so anyways, but now we're in the afternoon. I don't know why I used the 5-minute chart in the afternoon. I think I'm just tripping. There was still another good trade in the afternoon. Price entered the bullish hourly fair value gap, same task mitigating, all open. Okay, so yeah, I mean, this is not really important, but these are just the open fair value gaps, and this range is balanced anyway, so it doesn't really matter. Don't worry about what I just said there. But this was still a very sweet trade. You have everything you need. The point of interest, you have your inverse fair value gap, you have a fair value gap right there. You have another one here, which is more noticeable, but I'm using the first one. And then changing the state of delivery. Close up here, stop beneath the fair value gap, profit at the midnight open. You could have used the high of the day too. It's still a lot of RR. So that was that. Alright, so let's look at Wednesday really quick. So the daily chart is starting to show the want to decline a little more because it has trouble making highs, and CPI is at 8:30 today. So you see how we've started to kind of trend lower a little bit. We've put in a new high, and we've had major news start to release. So we are showing the direction is kind of starting to be lower. I will use the hourly chart to find trades during 11 a.m. session. So 11 a.m. session, you see you have the hourly breaker, which supports price and pushes it higher. Same thing, we have an hourly sweep here. This is another point of interest that can be used to look for trades. And then in the London session, there is a nice long after we've hit beneath midnight open. We've done a 3-minute sweep. We're inside the hourly bullish breaker. So if you're anticipating price to expand, you have a bias, and you can be discretionary and then use this breaker as a PD array, a point of interest. That's how you really determine your point of interest. Is that the bias doesn't really matter too much when I take trades. It's just I use the bias to help me determine the best point of interest, so that when I'm looking at the higher time frame, before I go down to a smaller time frame to look for trades, I understand where price is moving to, where it's trying to reach for, and what areas does it become attractive, like premium and discount areas. Otherwise, once we've gotten this long, we do have a shorting opportunity. I can use the bullish fair value gap here, change in state delivery, there's a bearish fair value gap there. So there is everything I need to short. And then I can target midnight open or a low here. There's relative equal lows. I could have targeted down there. I just randomly put at midnight open just because I try and go for 2RR, but if I can hold, if I'm confident it's going to make a bigger run than I would. Here I just wouldn't be too confident because of CPI. And you can see how it very much does move to the side after the initial expansion. It's hard for it to really try and come back. And it is also probably because CPI is later. But yeah, let's continue going forward. You have your another 15-minute order block, and that's the 15-minute order block viewing from London. We have another one here, which price does retrace into a 930, but then it's shy to go up and make a new high. In the afternoon, you do have your 830 open. You're above that. You do have shorting opportunity here. You can short up here at the inverse fair value gap. There's also possible shorting opportunities as we enter the higher time frame wick, the rejection block up here. But this trade is from 9:45, so I'm using that 15-minute bullish order block. Only thing is the entry is above 8:30 open. We're also above midnight open, so it's not the best. It still did draw to 8:30 open, so it is fine to enter here, and it does work for a little bit. But my take profit is way too, how do I say this? Way too ambitious, and it ends up coming back down and stopping me out here. Honestly, I don't think this was a good trade to take, so I'm going to count it as a loss, even though I could have easily targeted these highs, gotten 2RR, and then probably 2RR, something like that. Maybe, I'm not sure if I would have been able to get 2RR. It looks like this is a 40-point stop, so yeah, maybe I could have targeted up here or something. I don't know. I don't know. I think it was probably still lost. I mean, it is what it is. It's fine. So, we do then get to the hourly breaker. There is another opportunity here, but you have your fair value gap. You have a bearish fair value gap there. Change the state of delivery, but it's outside the time. It's 12 o'clock. So there's no more trades. And up here, you don't have a trade opportunity unless you want to count this as your change in state delivery. That's the bearish fair value gap. This is the inverse fair value gap. This is the bearish fair value gap, and then you have your change in state delivery there at that lower here. So you can consider this the model, but I wouldn't, because you would just get, you could still short here. Honestly, actually, I don't know why I didn't. Maybe something I missed, but yeah, you could have aimed for that low too, and there you go. Probably because I was still focused on this long working out that I didn't start to look, is there a shorting opportunity here? And the fact that there is a shorting opportunity here, though, it counteracts this long idea. So that's maybe something I should note. That's something I'm not sure if I should do. If I'm in a long and I see a shorting signal, if I should close long. But that's something I'll have to find out over time and journal separately. I think there's an afternoon trade. There's a couple. So yeah, let me go back to, this is morning. Yeah, so this is the 15-minute fair value gap, and then you have your rejection block down here. This was a bad trade down here, but I'll still go over it because I did take it. This would have been a really nice short. You have a 3-minute sweep that goes into a 15-minute rejection block. You're above the 8:30 opening and the midnight opening, so you can hold this for a very big range, and then it comes down and hits that fair value gap that's open. But I would have targeted, I could even target midnight open and just continue going lower. This was just a safe target. This and this low were just very safe targets. Then this is the trade that I did take. So actually, this isn't really a good trade at all. I'm going to go to my Wednesday, and this is actually a losing day. I don't know why I put that, but yeah. I tried to short here after, but there was no sweep. I think there was a sweep. There was a 50-minute sweep here, and it did sweep along. It made equal highs with the old high, but because this was such a long wick, I didn't really pay too much attention to that. And then I don't know why. I think I accidentally reversed the position when I got stopped out. I don't know why I did that, but yeah, I closed it immediately. So I mean, I don't know why there's an extra arrow. So sorry about that. But my point of interest was, I think I had the wrong type of order. So yeah, but anyways, my point of interest was the midnight open, which was right around here. There was a rejection block, so and I hadn't really risked too much, and I honestly, just a bad trade. I wasn't even supposed to take it because I need an inverse fair value gap. I was using the volume imbalance, so that's not really the rule. And then the SIBI was supposed to be that down close candle you can see right beside the blue arrow, but the green candle came in immediately and filled that down close candle and prevented the fair value gap from being created. So I went short on the close of that what I thought would become a fair value gap by accident. I don't know why. I completely forgot to wait for it to form, and so I shouldn't have gotten in here, but I ended up and I paid for it. Like coming up to that trade though, everything was fine. If there was an inverse in a fair value gap though, I would have been able to take it. But anyways, then there's this trade, but I moved my stop to break even. So I shorted here, everything I needed to short. I shorted here. I was gonna hold it till this low, right there. I could have held it to these relative equal lows, but I decided that low. This is the high of the hourly breaker, and I didn't want it to bounce from there. It ended up not bouncing. It just continued. Well, it did bounce here, and then it ran down pretty quickly. But I mean, I moved it to break even because first of all, I was scared of taking a second loss, and second of all, CPI was coming up, which created a lot of discomfort. I was honestly okay with putting it to break even. I was a little hard on myself at the time, but I'm not very hard on myself right now. I think it was the better choice. Sorry about that. Simply because I just think that, well, I was preoccupied with other things, and I just couldn't bring my focus to those things, and I couldn't keep my focus away from the charts, and I was continuously worrying about where the trade was. And since I was in my room, it was early in the morning, and I was doing other things. I just decided that putting my stop break even was the easiest way of just not worrying about it anymore, and then it ended up working quite nicely. But that's okay. In the afternoon, though, I was planning on trading, and I got off work at 1, and I wasn't here on time, wasn't ready on time. I did chart. This is what's stupid is I could have been here on time if I had started trading right away, but I decided to wait until about 13:45 to 2, and then I noticed this trade was there. I had set an alert up here. I thought maybe it might run a second time higher, but I wasn't really ready to trade yet. So hopefully it'll run a second time higher, and it ended up not doing that. And it immediately gave me the trade signal, and I just wasn't there to take it. I was a little disappointed, and I did take this. Now this isn't the best trade because it is still my model. I didn't break my rules, but it's at the very end of the day. So even though it does, if you had a 3-minute sweep, there was another opportunity to go long here. It would have worked a little bit, but it wouldn't have really went anywhere. I think this is almost just like luck. I mean, it's random. It's moving sideways, so there's not really a huge trend or expansion to take advantage of here, and like there was up here. So that's just something to note. But it is what it is. You know, I'm not like I'm not shook or anything that this was a losing trade. I mean, it is what it is. So yeah, I think that's it for Wednesday. Going forward to Thursday. Oops. Oops. No, let me stay on there. Go back up here. Going forward onto Thursday. So today I swept some sell side liquidity. Is this enough to return to higher prices? So I'm talking about these lows here. We've currently swept Monday's low. We've taken all the lower liquidity for the week, and we've started to kind of show this wick going higher. But this is important. We haven't closed above the down close candle, so we could still be just retracing to some premium level into the rejection block of the daily candle, and then going lower from there. It's still very possible. The trend still does appear like it wants to go lower. Okay, overall in the past 3 days. So just keep that in mind. That's the sell side liquidity, the Monday's low that was taken out on. This is Thursday. Wait, Tuesday, Wednesday, Thursday. Wait, so. Oh yeah, Monday's low is a little lower. Okay. Whatever, you get the point. But I want to start by focusing in on when we take out previous day low. So right here, this is at 3 a.m. Probably another beautiful trade. The change state delivery would have happened too high, and no RR would have been attractive. So you see where we made that run down into the sell side liquidity. I would have needed to wait for price to close above here, and by that time the stop loss is unattractive. The RR is unattractive to me because of how big the stop loss is. And it's not like I could have waited for it to retrace to get a better price and a better stop loss, better RR. It's not like I could have. So that's that. Earlier in the morning at 3 a.m. though, we had a shorting opportunity above midnight open. The 15-minute fair value gap is our point of interest. Right here, 15-minute fair value gap, point of interest. So price comes up into this, and then we short from there down to the sell side liquidity. That is another area though where you can look for a trade, and there is a nice trade here. So you have the inverse fair value gap, the fair value gap, the change in state delivery, going short as all these things form. Here's another mistake I made, is I shouldn't have went short here. I would have had to wait until the fair value gap forms. So I would have needed to go short here, and now that would have been unattractive for my RR. So I mean, I would have probably waited for this fair value gap to be traded into, and then wouldn't have gotten a trade. But the idea is still there. Okay. And then this is another trade to complete the market maker X model, which was present but would have lost this time. So again, I had a 930. I don't really like to trade that time too much, but it is the model, but it does fail because of news. And honestly, this might not have even failed. This happened so quick, the wick down here, that maybe it wouldn't have had the time to actually fill your order, and your order would have still been fine. But yeah, this is hectic, and it happens sometimes. So overall, Thursday was a really bad day. And you can maybe you can think about maybe why. I mean, the whole afternoon the previous day we trended lower. It's not like we ever had a break and we moved sideways. We didn't. We had a little bit of sideways price action during midnight, so I think London would have been fine. But overall, we just created a bigger sideways price action, and then the morning ended up delivering that, which is good. So the morning, I mean, is good. It's just, like I said, it's just unfortunate that something like this had to happen. And then by the time 9:30 comes around, we're above midnight open and we're above 8:30 opening, and I'm sure there's still trades that I could find, but because we're both, both these levels, midnight open and 8:30 open, are being traded above, you can't really continue buying. I can't argue to continue buying, since I do try and use these levels interchangeably for my directions on whether I want to be a buyer or seller. finally, we're gonna end with actually no. Alright, this is Friday, and I do apologize. There will be a lot of noise in this last day because there's some people around me. But um, Friday saw a big down close that did more than the entire current week range. So this is a pretty big day. It's also not a coincidence that we have this volatility. I mean, it might be a coincidence, to be honest, because most of the volume came out early in the day at 1800, and I mean, I have no idea when the escalation started happening. I don't want to really mention any words, but there was definitely an escalation somewhere in the world on Friday. Um, so there was a lot of. I think there was definitely a lot of. It will create a lot of volatility next week, for sure. As I think more people are starting to realize just this morning and last night, towards the end of the day, Friday. But yeah, it will definitely have an impact, as if it hasn't already has had an impact. Um, Price had an intense drop overnight, which was followed by some London consolidation. With that being said, I will elect it unfavorable to trade London due to the lack of structure available to find trades from, since we've deplaced so quickly. There is an hourly order block that does support price throughout the day. This was one of my point of interest that I will use to look for further trades. The high of the day is also made in a premium after an hourly sweep. This sweep also has my interest and prompts me to look for a trade. So we have the intense drop overnight, consolidation. This is normal. I mean, when you see a trend like this, is what I mean when you had, I think, Wednesday Asia session move so much. No, it was Thursday, was it? Thursday's, okay. One of these days is Asia session. I remember earlier in the video, yeah, Tuesday, it went up so much and went down so much, and you think it's a big range, don't trade the next session, but it didn't really trend, right? It had multiple trends inside of it. It cut up, so it created structure. But over here, we don't really have structure. We just have a huge drop. So it's a lot harder for price to find the same amount of excitement going back up to go to the high, versus if we had made shorter highs, we would have had more levels, easier levels to trade to, and more liquidity there to actually trade to. So that consolidation is just kind of like price taking a breather, and it's just slowly regaining its grounding. As 9:30 comes out, we do start to see more volatility, and this is where it gets exciting. So this is where I start to look at the hourly order block, and the times it enters, we do have trading opportunities. We have a 50-minute sweep too alongside that order block, paired with that order block. I'm not using the night open because I'm using 8:30 open. So right here, there's three opportunities. There would have been an opportunity here, but I don't trade ahead of 9:30. And then by the time 9:30 comes out, it wouldn't retrace back down here. It runs up to buy side liquidity. Then you have your draw, and you have your fair value gap, the inverse. You have your bearish fair value gap down here, and then you have your change of state delivery right at that candle. I would have entered on that fair value gap. Again, this is a picky entry, so maybe I wouldn't have. Maybe I would have entered lower. My stop would have been here, and I would have gone stopped. But I mean, this is ideally my stop should be at the highest high. Ideally. And then over here, I can tell you right now, I wouldn't have gotten in. I wouldn't have had a stop bigger than 40 points. So I would have tried to go for this level. Price wouldn't have given me the entry, and it would have went up without me. Again, I was not trading this morning because I started this week. I was just not busy. There isn't a single New York session I could have traded, and yet I still ended up closing the week with the most profits I've ever made so far, which is pretty nice. But the afternoon trade was tricky. I actually missed the first entry, and I picked the poor entry. So this is the afternoon trade once we sweep the hourly chart. Ideally, you want to get into the chart right after 1, as soon as 1 comes out, as high as you can. So that would have been right here. There is a 5-minute sweep with that short-term low, also a 3-minute sweep. So you can see that here. What I'm showing here is that I get in at the retracement into the 5-minute inverse fair value gap, or I'm also looking at these bearish fair value gaps here. I'm looking at that to get into my trade. I'm not looking at sweeps. If I had used sweeps though, however, you see that I would have spent a lot less time in drawdown or consolidating. I would have seen price quickly move away from, well, I would have spent the same amount of time consolidating, but not on my entry. Price would have quickly moved away from the sweep, and it would have been smoother. It would have been easier to sit in. But this is the trade I did take. Um, Compared to both these trades, so after the 3-minute sweep, you have everything you need to short. Let's just say I would have waited for change state delivery. I wouldn't have used these three candles because this is a very small down close candle, and I wouldn't have counted it. But I could have shorted here. This would have been a bad stop, bad RR. Same thing over here. This was a good short, but I would have been bad RR. Not bad RR, it would have been good RR, but not as good as the trade I took. So when I say I cherry pick stop placements and stuff, I don't only do it so it's favorable for me to win the trade. I also like cherry picked this is what I in reality this is what I should have done. This is what I in reality I did, which is still fine. I mean, these would have just been better trades, and I mean it still had more RR than the other ones. This is an incredibly huge trade. And there was no it wasn't ahead of CPI or anything. I was more comfortable holding price and letting it go into drawdown. Honestly, was very very close to getting stopped out. I should have had my stop a little higher, or entered a little higher, or waited for a sweep. Next time going in the future is what I will be focusing on, waiting for sweeps. But yeah, this did top off the week with quite a large paycheck, I guess. And like 158 points here, which is really nice. It's the biggest trade I've ever held for so far. So far, there's a lot more to come. Anyways, with all that being said, I hope everyone's enjoyed this week's weekly review. I hope if anybody watched the whole thing, you learned something. This is what I wrote here. I still need to finish writing a journal entry on this, but whatever, doesn't matter. Yeah, that's really it. Thank you very much. Have a good day and good luck next week.